Hi, it's Michael Cooper. I'm with the Private to IPO Partnership Network, and we are taking a look at and listening to CEOs who are leading their companies from the private sphere to an exit strategy. These are companies that are top-notch, gold standard in their industries, and know what it takes to grow their company to a successful exit. And today we're going to be speaking with Marne Martin, CEO of ServicePower. They get the right field service professional to the right job at the right time. The software is in a SaaS model. You can download it from the cloud. They have garnered validation from the Gartner Group. They are in an industry that is ripe for change. Marne is particularly interesting to our visitors in that Marne has been on all sides of the private to IPO equation. Marne was in the venture capital industry, vetting companies, working with companies, funding companies to help them grow and move them along the value creation channel. And she has also been involved in taking a company through the IPO process, and she has led ServicePower as a public company and experienced some of the pitfalls of being a public company, as well as she sees the advantages. So let's turn over to Marne and find out a little bit more from Marne.
Great to be here. Thanks for inviting me.
Now, Marne, can you give us a little bit of background on where you came from and how you got into leading ServicePower?
Certainly. So I was fortunate after my international economics finance degree, as well as eventually an MBA, to actually start working for a high net worth family that did a great deal of startups and acquisitions. So we would provide a number of the seed capital, kind of at an angel or a venture capital type level. At times we would finance the growth ourselves. Other times we'd bring in private equities. And then we would pursue an exit strategy, which at times involved selling to a trade buyer, other times an IPO. So that was a great experience, if you will, the first 11 years. After that, I moved to a different company, which I actually IPO'd in London. And I was there 5 years, and then after that, I moved to ServicePower, which had IPO'd in 2000 and is still publicly listed. So it's been, approximately 20 years of a lot of good experiences. I've done business or touched business in probably around 30 countries around the world.
Amazing. A lot of people run companies without even tapping the equity markets on the private side or on the public side. And those of us who have had experience with companies who have tapped the markets know how much change can come around a large infusion of capital. Do you have any good anecdotes around what happens when a company gets a large infusion of capital? How it can change the playing field for them?
Yeah, certainly. So, in general, you think of infusions of capital either to galvanize a restructuring or to galvanize growth, right? Ultimately, those are the two best reasons for a capital event. When I first started my career, we actually would be able to leverage up companies using much more debt and equity. At times, we could have 75% debt, 25% equity, even based on more cash-based financing. I'd say those days obviously are long gone. And again, while there are options to get debt if you have a heavily asset-intensive company or business, most often when you need to create a galvanizing event, as I mentioned, for a restructuring or to accelerate growth, then you really have, I'd say, depending on the scale of the equity raise, three options. There's, obviously angel level, or what we call friends and family, if you're looking at a smaller placement, or what's called a seed placement. Then you have the various tiers of venture capital and private equity. And in general, the delineation there is based on the risk profile of the equity raise and the size sometimes of what you're looking to do. Venture capital is more looking for very high growth and perhaps more risky investments. Private equity groups are really looking for companies that they can accelerate growth, cash conversion, profits, and exit, within a 3, 5, 7, 10-year portfolio, depending on the case may be. When you look at capital markets, there's a variety of ways of looking at that. Obviously, you can have what's called a value creation event through an IPO. IPOs in general have what I would consider two purposes. One, it can inject capital into the business from new investments, and also it can create the opportunity for existing founders or owners to place some of their shareholding to have, a return, if you will, on what they've already contributed to the business. And then, of course, once a company is on a public market, you have the opportunities to do additional primary issuances of shares to raise new equity. Although, of course, what's most common in publicly traded companies is what's called secondary trading, which is when you're retrading among an open marketplace, a public marketplace, shares that have already been issued.
Yes.
Again, just to clarify, secondary trading does not bring new equity into a business. It's only the primary issuance or expanding the equity capital in a public company that brings in additional equity to a business. But regardless, again, everyone is pretty much looking for the same thing. Owners and the management of a business are looking to get cash in for growth or the restructuring, and shareholders are looking to get a return on their investment that they can realize either through dividends or an exit strategy down the road.
And that leads nicely into ServicePower. You've been turning ServicePower around over the past couple of years, shall we say?
Yes, and actually it's been an interesting case because it was what I would call more of a multifactorial challenge, because you had different marketing and sales challenges. We had to develop new products, right, so we could bring new products to market. We've also been expanding our software as a service recurring revenue basis, which of course is what can drive the additional profitability in the future, what have you. So pretty much, all of the 4 or 5 things that you touch in a company, well, especially a software company, as you're bringing it from a more historical type of business to more of a modern type of software as a service business, we've been touching at ServicePower here these last few years.
And you've also done a couple acquisitions that have helped your product build out?
So the management team before I had joined ServicePower had done actually a number of small acquisitions. The approach that we've taken since I've been here at ServicePower has been that, yes, we have done one acquisition, which turned out very well for us. It led to the evolution of both our mobility product, which also that team has created our new Nexus product. But we've also focused and balanced that with organic product development. I think, when you look at how a company can grow, acquisitions are obviously a great way to put capital to work and to grow a company, but you always want to make sure that you have the ability within your own company to continue growing organically through your own efforts, as well as, innovating and creating product development as well. Because that's also important. Even if you acquire a company, you have to make sure that you know how to grow it post-acquisition. Mm-hmm. And that's something that many times people don't focus on as much. They focus on the acquisition strategy and maybe the 12 to 18 months after acquisition, but not really thinking about, how do I continue the growth when you look out 2, 3, 5, 10 years.
And you've got over 110 people working at the company now, right?
Yeah, and then we also leverage that with contractors. So we utilize contractors as well, whether it's in software development or in some of the services functions, etc. But yes, our employee base is a very good one, very highly educated, quite diverse. I'm very proud of our employees.
Mm-hmm. And how many would be on the product development side between the contractors and in-house employees?
We have about 30.
Okay, so around
about a third of the company.
Yeah, which is very substantial and will keep you on the bleeding edge of product development.
Yeah, certainly, because you're always, in a software company, you're always evolving not only what you're doing for existing customers with their use cases and their businesses, but you're also thinking about, where your markets are going, how you innovate, how you kind of jump ahead of where to get where you think the market might be in 5 to 10 years.
Mm-hmm.
Because to be a durable software company, you can't just be focusing on the here and now. You have to actually be trying to anticipate where the market's going to be in 5 years to make sure you get there first.
And one of the things that you've done, I think, from reading some of the material, is you've focused on some of the verticals out there where you have particular strength, right?
Very much so. So I think there's a variety of ways if you talk about how you best put money to work and how you, say, reduce risk as you expand out. So, first you want to focus on your core verticals and your core markets. So there's a number of verticals that we have a lot of, 20 years experience, a lot of experience in both longevity, customers, as well as use cases in. So continuing to penetrate those in our core markets of, that are Anglo-American, so UK, US, and then also looking at how we can go further into, say, the multinational businesses of our existing customers. Because we really have a very strong footprint in enterprises that many of them are multinational. So even if we only have 1 or 2 countries within that multinational footprint today, there is definitely the opportunity to grow out with them, at least to their larger markets. So the other thing that we're looking to do is through partners, so not necessarily through direct sales, but through partners, there's expansionary verticals as well as other complementary verticals that we can look at, that we know that our products, our technology have strong ability to deliver return on investment. And those are the various opportunities that we're pursuing more through resellers now or through channel partners. And that's relatively new to ServicePower. So it's something that I've been pushing a great deal over the last, especially 6 months with our commercial team here.
And I believe you will white label for a channel partner or somebody that will take you into the market?
Absolutely. The new products that we have developed, we develop them specifically around the ability to drive a white label or a channel strategy with them. Some of our traditional products weren't able to be, say, white labeled or channeled as easily. So we made sure that the new products that we developed, not only did we build them on kind of modern technology framework, but we also built them with an idea of fitting both a direct sales route as well as a channel or white label route. We also have tried to build the products with what's called an API first design. That means that you have an API, a RESTful API behind every single product feature function. And that also helps to the extent that we have opportunities to do what's called OEMing our software technology with a partner as well.
Okay. Now, you just recently announced a deal with Cambio On Demand. Can you talk a little bit about that deal? I think they've got some significant operations in the Toronto market, which, due to my location, I'm particularly fond of.
This is really interesting for us, and this is an example where we took an area of business that we know quite well, which is what I would call kind of mobile service. Our software has the ability to be a really good fit for what they're working to do with their business. And, we are very experienced and, of course, passionate about the ability to do what's called mobile servicing related to the auto industry. So this has a great deal of applicability not only to the business model of Cambio, but, frankly, in a wider way to how people are approaching, especially out of warranty or other types of remote servicing for the auto industry. So Cambio, if you will, is kind of our first partnership in the sector, and we're very eager to support and drive, the success of their business as a partner.
No pun intended on the drive?
Exactly, for sure.
Well, this is very exciting. Now, one final question, Marnie. You are listed on the London Exchange, and the whole Brexit experience must be surprising to you, or maybe not. Do you expect any effect from Brexit on the London capital markets with regard to smaller capitalized companies?
So what's interesting is obviously, Brexit is certainly having an impact on especially sterling. So in the short term, the depreciation of sterling compared to the dollar benefits us as a company because most of our revenue is in U.S. dollars. So to the extent that we translate it into a greater number of pounds sterling, that, of course, helps our reported results. But specifically related to that region and what we're seeing, the fear, of course, is that uncertainty pushes the UK government back into recession. I think in general, most of the segments that we're operational in, we're helping businesses to get greater return on investment and greater productivity. So we're well placed to help those businesses, even in the case of recession, to get more value from their assets. Related to the capital markets, especially when you look at small cap or micro cap, we already saw going back a number of years, and this was even prior to the formal Brexit event, that the amount of investment going into the UK markets in general has been declining. And I'm talking about the overall volume of investment as well as how it's oriented. So somewhat similar to the trends, but I'd say probably more exacerbated in the UK market. You see people going more to large and mid-cap investing, and you have a lot less liquidity in the small and micro-cap. And that definitely has hurt publicly traded companies that are in the small and micro-cap. Because even though you may be able to do a capital raise or a capital event or an IPO based on institutional support and what have you, a lot of the share price benchmarks and what have you are set by more retail trading and more small trades. So any decline in liquidity usually has a even stronger negative impact to share prices and overall market caps. And that we certainly have, unfortunately, been seeing even prior to Brexit in the UK capital markets.
Well, there's always the Canadian Venture Exchange. We love small companies on the Venture Exchange. Yeah, yeah.
There you go. We'll have to look at it.
We will keep our focus on ServicePower and watch where it's going. I know this is a sector that can benefit tremendously with your types of solutions, and going into the cloud is a natural for your client base on the small side and quite frankly on the large side. So we're going to look forward to watching some of the developments.
No, I appreciate that. It's been a pleasure to speak with you.
You too, Marnie. We'll speak soon.
Sounds good. All the best. Bye-bye.
Thank you.